Own your money. Own your life.
I'm Jared Dillian. This is the Jared Dillian Show. If you want to call to talk about your money, please call 844-305-7800. That's 844-305-7800. This is the Jared Dillian Show, and where I'm just not happy about a bunch of stuff. I'm not. I mentioned earlier in the show that we're finding out that people were using their stimulus checks to buy stocks. That was happening. This all started about 6 months ago when Charles Schwab went to commission-free trading. In the past, you would have to pay like an $8 commission. Even $8 is not a lot. But you had to pay $8. So that was some kind of friction that you had to experience when you were trading. And what happened was Charles Schwab went to commission-free trading. And all the other brokerages followed. E-Trade, TD Ameritrade, it's all free now. Free to trade. And we're going to talk about the economics of that in a second. But I just want to say that that's a bad thing. And trading volumes have exploded at the discount brokerages. And people are opening new accounts left and right. I forget the exact statistic, but I think we've opened more accounts in the last 2 months than we have in the last 5 years. Millions of people are opening brokerage accounts to buy stocks. And it's bad. It's really bad that this is happening. There's, just like the housing bubble, right? There's a certain number of people that just had no business buying a house. The homeownership rate for years was 63%. Then it went to 70%. That last 7% of people had no business buying a house. They were totally irresponsible. They shouldn't be buying a house. They did not have the sophistication. They did not have the responsibility. They shouldn't have been buying a house. There's millions of people that should not be buying stocks. Should not be buying stocks. They are not intellectually and emotionally equipped to handle them. They have no understanding of risk. And it's all short-term, get-rich-quick type of stuff that people are doing. Some of the dumber things that I've seen is like people are piling into airline stocks. And I don't understand this. Airline stocks have crashed, okay? And so I guess people are like, oh, well, we'll bet that they'll go up again. We'll bet on a rebound. Do you understand what's going on here? The airlines have effectively been nationalized. They're going to be taking government handouts for years. And all the upside in the stocks is going to be taken by the government. It's going to be gone. There's going to be no upside in airline stocks. There's an ETF that invests in airline stocks. The ticker is JETS, Jets, Jets. And people are piling into this ETF. This ETF has had record inflows for 44 days in a row. And it's all retail investors investing in airlines. This is with stimulus checks. It's bad. We should not have commission-free trading. Like, we should actually I understand that this is market forces, okay? It's not like the government stepped in and said that commissions should be free. But we have unleashed a tidal wave of unintended consequences. I mean, the stuff that people are doing is just absolutely mind-blowing. And look, throughout history, people have always blown themselves up with stocks. I mean, it happened, or Bitcoin. People did it with Bitcoin. They did it with cannabis stocks a couple years ago. Like, people are always going to blow themselves up. But what we've done is, you say, oh, we have a new generation of investors. No, they should not be investing. They shouldn't. The price is too low, and we've made it too easy. We've made it easy to invest. Investing should be hard. It should be hard, and it should be expensive, especially for people to trade stocks on their own. If you want to talk about mutual funds, if you want to allow people to invest in mutual funds, that's fine. Use an outside manager. I'm talking about buying individual stocks. You think these people are building a diversified portfolio of stocks? Are they building a diversified portfolio of stocks? No. They're just buying crap. This is, and here's what's going to happen, okay? So the S&P went from 2,200 to 2,900. And like I said yesterday, I think we've kind of topped out, and I think we're going to sell off, and people are going to get hurt. And these are not people who can afford to lose that money. Take a $1,200 stimulus check. Why don't you put it in the bank? Put it in the bank. Don't put it in the damn stock market. It's unbelievable. And trading is free, so people are just trading like crazy. Anyway, when this happened, when Charles Schwab announced that they're going to have commission-free trading, brokerage stocks crashed on the news. Like because they're all going to have to go free. So let me explain the economics of this. So a business that doesn't charge anything, how do they make money? There's a couple ways that they make money. They have this thing called payment for order flow. Okay. So basically, seems slightly shady, and it is slightly shady, but it's totally legal. You have these big market-making firms. They're not really hedge funds. I mean, they're market-making firms, big electronic market-making firms. And they accept most of the order flow from the discount brokerages, and they pay the discount brokerages for this order flow because it's profitable to trade off of. So the point here is that when somebody takes their $1,200 stimulus check, and they put it in the stock market and they buy these stocks, this is profitable for somebody else because this is dumb money, and people are making money off of this. It's bad. The other way they might make money off of this is stock loan. Okay, so if you short a stock, you borrow the stock, you have to pay interest on the borrow, so they make money that way. They also make money through margin lending. Reg T margin is 50%, so whenever you go over your margin, they make money off of that. The commissions were actually a pretty small part of their revenue as it was. It was like 10-20% of their revenue. 6 months ago, what I said was this was a race to the bottom and all these brokers are going to go bankrupt. Actually, that was a bad prediction. They're doing better than ever. They're getting new customers all the time. Air quotes, customers. Sheep. So, is it good for you as an investor? It depends. If you're buying airline stocks and all this nonsense, then no, it's not. If you're actually behaving like a normal person and building a portfolio, and then it's good because you can do it for free and you're not paying commissions. It's not what most people are doing, and it's not that big of a savings. If you made 20 trades a year in the past, then you just saved $200. $200. Great. Terrific. So, margin lending doesn't affect a lot of people, but the margin rates are pretty high. Anyway, when people have no transactions costs, they trade a lot. And I specifically selected a financial advisor that charges very high commissions. And that was the goal. I wanted to pay higher commissions to prevent me from trading frequently. And I buy and hold for years because the commissions are huge. And that is how I stay profitable over time. I pay huge amounts of commissions. I'm Jared Dillian. This is The Jared Dillian Show.
The Jared Dillian Show.